Hello and welcome to the market update for May 2026. As always, we're going to give you a quick rundown of what the market here in the Baltimore, DC area looks like. And we're going to start with, is my favorite saying, history doesn't repeat, but it rhymes, as I'm a big believer in business and life cycles. So let's go. First, a little commercial, and that is we have Express Success. If you are a real estate investor of any kind, no matter whether you're just new or whether you're experienced and you've been in this business for a long time, I can highly recommend the Express Success program. It's overseen by Vena Jones-Cox. If you're not familiar with her, she's a great real estate investor and business person in general. Basically, she runs several businesses, including a couple of RIAs, Real Estate Investor Associations in Ohio, one of which she oversees as administrator and one of which she sees as owner and president. In any case, this is a year-long course, and you get, as you can see here, what you get: the member-only access to 100 hours of videos, online coaching once a month. It's group coaching from Vena Jones-Cox, a roadmap, and you get 12 months, 1 year of online Saturday workshops. We offer those workshops through our connection to a mastermind group with 11 other RIAs around the country, and each of those workshops is $47 to $67 for members, and you get all of those at no additional cost for the Express Success program. And a few of the Maria members have joined up and done quite well with this. So I will tell you, it's well worth the money. I wish that this had been around when I started out some years ago. It's $12.97 currently, and go to the Maria website. We can sign up for this. So let's start off with the stock market, which we don't really invest in. As investors, it's real estate. Nonetheless, the stock market has done pretty well this year. For the last 12 months, it's up quite a bit. I don't have the exact number, but you can see it's in the agreed level, and that's been for the year, a month, and a day before this was taken. This was earlier this week in May, and you see a year, a month, a week, and even the previous day, it's all been in the agreed category. So the stock market has done really well, even in spite of the high gas prices and so forth. Mortgage rates are down slightly, very slightly, 1 basis point, which is from 637 down to 636. Not much of a move, but nonetheless, it's still moving in the right direction. You can see here the chart from the Federal Reserve. The highest rate was back in October of 1981, 18% interest rate. So if you think 6 or 7% is high, probably 18%. The lowest rate was January 2021 during COVID, 2.65%. If you locked in a rate at that time, you're very lucky and very fortunate. You should be very proud of yourself for locking that in. Baltimore metro area. The thing we will look at is months of supply. This tells us how fast houses are moving off the MLS. You can see the last 5-year average was 1.5. This year, we're 2.3 months. This simply means if the houses were selling, given the number of houses on the market and how fast they're selling, it would take 2.3 months to clear the market of all the houses that are listed for sale. What we say is a balanced market between buyers and sellers is 6 months. Anything less than 6 months, and it's a seller's market, it means there's not a lot of inventory, and the sellers can demand high prices, which they're doing. Not in every category, because we look for motivated sellers who are willing to give us a good discount. Nonetheless, the market overall is a seller's market. If you're a flipper, a fix and flipper, this is a good market for you because it's a seller's market. You can see the prices here. There's 2 red areas. Baltimore City is down a little bit, and Howard County is down slightly because Howard County is the priciest subdivision jurisdiction in the Baltimore metro area. The Baltimore metro being Baltimore City plus the 5 surrounding counties, Baltimore County, and Arundel, Carroll, Howard, and Harford County. So you can see all of those have increased in price because, again, it's a seller's market, so the prices are being marked up. And this is April over April. This is 1 year over. This is April 2026 versus April 2025. Only Howard County and Baltimore City have declined slightly. In Baltimore City, the decline is almost not negligible, $1,000 from 250 down to 249. So let's look at the next slide. This is actually days on market. You can see actually we're in a slightly slowing market because just as the inventory went up, I'll show you that again. The inventory or I should say the months of supply has gone up from 1.5 average over the last 5 years to 2.3. That shows the market slowing a little bit. Here's another evidence of that. You can see the trend here is up. And this peak here is the winter season when things are slowest. It went up from about, let's see, 19 maybe, then let's see, that's 19, and maybe that's about 22, and then all the way up to 30 days on market. So the change from April 2025, year over year, up 25%. This is a slightly slowing market. Again, the evidence there was the months of supply, which is creeping up. And if it gets to be 6 months, we'll know we're in a balanced market. I think that's not going to happen for quite a while. But the trend is a slowing market. So just be aware of that. If you're a flipper, it used to be that you could make a mistake that would cost you money, but that got kind of washed out when you went to sell the house because the prices were going up and the market was moving pretty quickly. That's not the case anymore. If you're a flipper, you got to be very careful. Make sure that you're not making mistakes that are going to cost you money on the other end. That's the Baltimore market. On the DC market, you can see, again, slowing market. The months of supply is going up to 2.5. It was 1.7 over the last 5 years. It's up to 2.5. So ever so slightly, the market is slowing, even in the DC area. DC prices are a lot higher, as you can see here, and they have a lot more jurisdictions surrounding DC in the Maryland and Northern Virginia area. Falls Church took a big hit, 13% down from 1.3 million down to 1.172. The least amount of fall was Prince George's went down by about $4,000, and from 454 down to 450. That's the least pricey or least expensive county in the area, and that's way, way above the Baltimore area, except for Howard County. So in any case, you can see there's a lot more red on this chart. So the DC area is definitely slowing down, and the prices are coming down accordingly. Days on the market, you can see again the trend is way up. April over April, it's now 8 days. A year ago, it was. I'm looking at the winter area here because you can see where the peak is. Here in it's like about January, February, December, January, the peak is around 35 days, 36 maybe even 37. Here, a year ago, in winter of 2024, this is winter of 2025. A year ago, it was 22 maybe, and then before that, it was down around 20. So 20, 22, now it's 35, 36. So you can see it's quite a bit. The change is 14% year over year. It's now in April. It's 8 days in April versus April a year ago. Let's see when that's about well, a little bit up. Maybe it's maybe 9 days or something, 7 days. In any event, it's definitely slowing down. So keep that in mind as you look for prices. Make your offers accordingly. So this is the takeaway for the May market update. Bottom line, like I know I sound like a broken record. I say this every month because the market moves slowly. It doesn't turn around all at once. Again, there's a continued shortage of housing in the DMV. There's not going to be a crash. We're not going to see something over 1 or 2 months, the drastic change. But I am seeing a slowing over the next several months, which again, if you're a flipper, be very aware that the prices are not going up as fast as they were. So make your offers accordingly and do your numbers very carefully. Don't think you're going to get saved by a rising market that will cover up any mistakes you make. That was easily done a few months ago or a few years ago. Now it's not so easy to recover. You could lose a lot of money if you don't make your offers and plan accordingly. So the bottom line, flipping and rehabbing will continue to be profitable because we're still in a seller's market. So if you do a good job and you price your house anywhere near correctly, you will make money. You'll be able to sell your house pretty quickly. Rentals are always safer because over the long term, rental prices go up, and as the inflation takes over and the dollar is worth less, rental prices always go up over the long term. If you're going to be a long term buy and hold housing provider, it's always a safe bet that if you're going to buy and hold a property for 10 or 20 years, you're going to do pretty well. And important facts to remember, as I say every month, all real estate's local. That is Baltimore and DC. Even though the two markets are different, they're close enough that you can kind of see how the market's slowing from one to the other. We looked at Baltimore was 2.3 months of supply and DC was 2.5. So they're not correlated, but they are similar to each other, not correlated. Mortgage and rent payments cannot outpace growth in wages. If wages take a tumble, your mortgage or rent payments are going to have to do the same over time because people can't pay more for mortgages or rents than what they're earning. So keep an eye on growth in wages. If growth in wages tails off or falls to negative, then you got to be careful about what you're doing with your investments. I think that's it for this month. Thank you. And again, thank you for being a member. If you're looking at this, you are a member of Maria. Thank you for being a member and forward to seeing you at the next meeting on June 11th.